Joining me now is Siddell, CEO and Chief Investment Officer at EGSI Financial. It's good to have you on the show, Ed, in what's a very positive day for stocks. What do our viewers need to know?
Well, thanks for having me back. And, it really is. After yesterday, after Powell's speech, I think this whole year has been really surprising. This has really been a year of momentum, and it really hasn't been about the fundamentals. And I think it's the momentum and the retail investor that's really been pushing through this. And what's been exciting about today is that the market, the rally, it's really broadened across more stocks instead of just the tech sector. And in some of those sectors that have really been hit hard, from energy and manufacturing, materials, utilities, they've really started to come back. And so I think these may be good signs.
I think investors hoping that the good signs are here, despite the Fed indicating yesterday that 2 more rate rises might be on the horizon before year end. Ed, do you expect those to play out?
I do. I think we're probably going to get at least 1 more raise. I don't think if we get more than 1 raise, it's not going to be back to back. It could be, 1 in September and then 1, maybe in December, because I think the Feds really want to make sure that they're not going to break the economy. And even though there's been a really good rally this year and the stocks have really broadened across different sectors, there's still a lot of concern. For me, I'm being very cautiously optimistic. We've got a lot of consumer debt out there. It's at historical highs. We have credit card debt. People haven't been paying on their student loans for years, and yet they've bought new homes and cars. And so I think as commercial loans start coming due in the next 6 to 12 months, we may have some more hiccups or bumps in the road. And that's really going to determine, if this rally continues to play out and the bull market is strong and the momentum pushes through, or if there's a pullback.
There is the famous adage for market watchers, Ed, that as goes January, so goes the year. I think in January, we might have thought something different for those of us who have followed the market for a long time. But do you think that might hold true this year?
I really think it could. If it keeps pushing through the way that it is, and June finishes up strong going into July, I really believe that we could see another 5% increase in the S&P before year end. And I was one of those naysayers. I really was. At the beginning of the year, like I said, if you had told me the market was going to be up over 13, 14% by June, I would have told you were crazy. But again, the momentum, retail investors, they've just kind of been pushing through and not really adhering to the fundamentals. So, I think that the market really could push through and we could finish off on a positive note, which would be great for everyone.
As a chief investment officer, Ed, what are sectors, even stocks that look attractive to you and maybe some that you'd avoid?
Yeah, the ones that I really like are those that have been hit hard. Manufacturing, materials, utilities, even energy. I was a big proponent of energy early on in the year, and when it really started getting hit hard, we pulled back, but now we're kind of back in. I really like those. Technology, it's oversold. I think if you're in, it's great. And maybe look at some of those AI stocks that aren't like NVIDIA that are already really high. But again, technology, that's going to be a good sector. Some of the things that I would really stay away from right now, at least for the long term, would be financials. I'm still a little apprehensive because of the amount of commercial loans that are still coming due. And again, they could get hit pretty hard.
Interesting. Let's talk inflation, because for the consumer watching, the biggest question out there, which also impacts the market, is realistically, can inflation get back down to the Fed's 2% target and actually stay there? What's your take?
Not if the government keeps spending the way that they do. And that means that the Feds are going to have to add more to their balance sheet. I was reading a report saying that, it's all about corporate profits that's going to push up inflation. Well, it's really the government spending. We have to get that under control. We've added so much to the national debt, which has really been, fueling the inflation, for the last couple of years. So once we get that under control, I think everything else will fall into place, but I just don't see that happening. And Powell even addressed that in his remarks yesterday.
All right, Ed Siddell, CEO and Chief Investment Officer at EGSI Financial. Ed, thank you.